all these Bitcoin treasury companies are going to go out of business, including Strategy. I mean, Strategy might go out of business last. A lot of those companies may have to start selling the Bitcoin that they bought. And so I think that all that Bitcoin is going to get liquidated. The only thing that Bitcoin has going for it potentially is a government bailout. The crypto donors who have backed Trump and put him in the White House, they may say, look, Donald, you got to step up here. Things couldn't possibly be better for Bitcoin. Everything you could possibly hope for has already happened. So what could go right? Nothing. It's a fraud to kind of represent it as some kind of digital version of gold. Bitcoin's used for nothing. If Strategy had spent $57 billion buying gold, he could realize that profit. If he wanted, he could sell. Gold is up better than 50% on the year. Real gold is doing really, really well. I challenged on X Michael Saylor to a debate on this very topic. I mean, he's been ducking me on debating gold versus Bitcoin. I'd like to debate Strategy. It's a scam. I don't think it's a viable business. I think it's going to go bankrupt. I'd like to debate that with you.
GM everyone, or in my case, good evening, and welcome back to another episode of the Coin Bureau podcast. Now, today we have on a very special guest who is no stranger to the crypto community. It is Mr. Peter Schiff, the chief economist and global strategist at Euro Pacific Asset Management and the founder of Schiff Gold. And he is our favorite gold bug that we like to bug. So, Peter, welcome.
Oh, thanks for having me on your podcast. Always a pleasure.
My pleasure. Great having you. Before we dive in, Peter, just a quick few disclaimers for the audience. Nothing in this video is financial advice. Please consult the disclaimer in the description for more information and consult your financial advisor before making any investment decisions, be it crypto or gold. So, Peter, you joining us on a day when Bitcoin is completely collapsing. So it's Friday evening, my time, and it's close to 80K right now, about 82, 83K. And a few weeks ago, you said on X that Bitcoin holders should get out above 100K before an implosion. So it seems to have been a bit prescient there. But what makes you so confident, though, that Bitcoin's latest slump now signals a permanent decline rather than a temporary pullback?
Well, Bitcoin has a history of, coming back from the dead. So I can't count it out completely. But I think that the situation today potentially looks a lot more dire than it has in the past. So I think there's a lot more downside now than there was during previous cycles. I think what's going to drive it is going to be three things. One is the leverage. Two is the ETFs, and three are the Bitcoin treasury funds. And none of these really existed during the prior big down cycles. And also, of course, the amount of money here that's being lost is much greater because we're falling from 126,000 peak. So that market cap was a record high. So even if we have a similar percentage decline that we've had in the past, the dollar value of what's lost is significantly higher. So, we could go after, those different factors one at a time. But so the first one I think is let's say the leverage. I think that what's developed over the past year or two is companies have been able to accept Bitcoin as collateral and to loan money against Bitcoin. And I think a lot of Bitcoiners have been encouraged to deposit their Bitcoin onto these platforms because they were so confident that Bitcoin could only go up, especially with Donald Trump and a Bitcoin president and a strategic reserve and all these Bitcoin treasury companies and all the hype. I don't think that Bitcoiners were that concerned about a big decline in their Bitcoin, but they did want to harvest some of the gains and enjoy some of those gains. They didn't want to pay capital gains taxes, and they didn't want to give up their Bitcoin, right? The number one rule of Bitcoin is don't sell it, right? So if you never sell your Bitcoin, you're living in your parents' basement, you got nothing, you're like a pauper, but you got all this money on paper. So I think a lot of people put up their Bitcoin, borrowed money, and, spent it to pay their bills, or they took vacations, or they bought a car, maybe they bought a house, depending on, how much Bitcoin they put up. And so I think that all that Bitcoin is going to get liquidated. And so the people who didn't want to sell their Bitcoin at 100,000, 110,000, 120,000 are going to be forced to sell it at much lower prices. Maybe 50,000 or 40,000, or who the hell knows where it's going to go in this initial, could go lower than that. So there's much more leverage now, I think, than we've had in previous declines that will accelerate. So that's number one. Number two are the ETFs, which really didn't exist until the beginning of 2024. And the ETF investors are not diehard, Bitcoin maxis. If you really believe in Bitcoin, you don't own an ETF. It defeats the whole purpose of Bitcoin to be, self-custody. Why do you want to put your Bitcoin with a third party, right? That doesn't make any sense. But the people who were doing that just wanted to speculate on Bitcoin. They didn't care about, the supposed advantages of Bitcoin. They just thought it was going up, and they figured they'll buy it. Right? And there was so much hype in the financial media. There was so much FOMO. A lot of people got into Bitcoin ETFs. And in fact, a lot of the money came out of gold ETFs and came out of gold stocks to pile into these Bitcoin ETFs. And I think that as Bitcoin really starts to break down, a lot of those, Johnny-come-latelys who jumped on a bandwagon, when they're down 20, 30, 40%, I think these guys are going to cut their losses. They're going to say, you know what, didn't work out. Let me take my chips off the table. I'll go to another casino. I'll buy something else. Maybe they'll go back to gold or gold stocks. I don't know. But I think that selling is going to overwhelm the market because there could be so much of it so fast. There's no way to absorb it because all that buying, those inflows happened over a couple of years. The outflows can happen over a couple of weeks. And while you had, the whales, the OGs who were happy to feed their Bitcoin into that ETF demand, I don't see the deep pockets that are willing to buy all that Bitcoin. And so that's going to kill it. And then I think all these Bitcoin treasury companies that have sprung up over the past year that have been buying Bitcoin and borrowing money and issuing stock to buy Bitcoin, that whole business model is going to collapse. So that new demand is going to go away. But a lot of those companies may have to start selling the Bitcoin that they bought. And in fact, MicroStrategy, I don't know where the pain is where they have to start selling. Eventually they will. But the most significant thing is that MicroStrategy is going to stop buying. And when they can no longer buy Bitcoin because they can no longer sell stock at a premium because they're going to be trading at a discount to their NAV, the whole investment case for MicroStrategy falls apart because they can no longer generate, a Bitcoin yield, which was a deceptive term anyway, because it's not really a yield, but they won't be able to do it when it's at a discount. And then actually there's a fourth thing that we didn't really have in the previous cycles, and that is the bull market in gold. Because one of the reasons that Bitcoin attracted a lot of attention and a lot of money was because when it came on the scene around 2010, 2011, that's when gold peaked out at 1900. And gold basically traded in a range from 2011 to 2024, didn't go anywhere. And that was when Bitcoin, really had the spotlight to itself. The promoters were able to say, look at gold, it's going nowhere, it's dead, it's old school. Bitcoin is the new gold. Bitcoin is gold 2.0. It's the fastest horse in the race. Forget about gold. You got to buy Bitcoin. And as Bitcoin continued to go up and gold didn't, that narrative gained traction and people were buying it. Now, look at this year. Bitcoin is down. I don't know, it's 5-10% on the year, something like that. I'm not sure exactly. It's moving so fast. Gold is up better than 50% on the year. And so now all of a sudden, real gold is doing really, really well. And so if real gold is doing well and fake gold, Bitcoin, fool's gold is not, why buy it? I mean, the Bitcoiners like to say, zoom out, look at the last 5 or 10 years. That's irrelevant to a lot of investors who are not going to look back 5 or 10 years because they haven't owned it for 5 or 10 years. They just bought it a year ago or 2 years ago, and they would have been better off had they bought gold. And I think it's more of what have you done for me lately? And for Bitcoin, it's nothing. And in fact, ironically, MicroStrategy is barely ahead on its Bitcoin. It's been buying Bitcoin for 5 years. And I don't even think it's ahead 15% right now on that. I mean, Had MicroStrategy bought gold or silver or just about anything, just the S&P 500, every time they bought Bitcoin, had they bought something else, they would be better off right now. They would have a higher NAV. Bitcoin was about one of the worst things they could have done with the money. But what makes it even worse is that Saylor can't sell. If Strategy had spent $57 billion buying gold, he could realize that profit. If he wanted, he could sell. But there's no way they could realize any profit on Bitcoin, because if they tried to sell, the market would just completely implode. And there's no way he could get out even close to what he paid. So there's a lot of factors just said, that I don't think were there in prior markets. And so this could be a very brutal decline. I mean, the only thing that Bitcoin has going for it potentially is a government bailout. And I wouldn't completely rule that out, because Donald Trump has done crazy things and his whole family now is all in on crypto. And so maybe the wild card is the crypto donors who have backed Trump and put him in the White House. They may say, look, Donald, you got to step up here. You've hitched your presidency to a crypto wagon. If Bitcoin goes down to 10,000, this is going to reflect bad on you. You got to figure out how to prop up Bitcoin. And so maybe they decide that, okay, let's take advantage of this decline. We're going to buy the dip and we're going to spend, all this taxpayer money buying Bitcoin to fill up the strategic reserve. In effect, that would be a bailout, a Bitcoin bailout where taxpayers would bail out Bitcoin speculators, but they're not going to frame it like that. But I think that's about the only hope that the Bitcoiners have at the moment is a U.S. government disguised a bailout for Bitcoin.
Wow. So our only savior is Uncle Sam. Donald Trump using Uncle Sam's balance sheet.
Ironically, yes.
Okay, interesting arguments there. I do want to push back on one or two of those points, if I may.
Yeah.
So you mentioned the 4 points there in terms of what's different this time than the previous cycle. So let's start with the leverage one. I think the amount of leverage right now in terms of Bitcoin leverage is way less than it was prior to FTX collapse. I mean, there was a report out earlier this year by Galaxy, or about halfway through this year by Galaxy Digital, which looked at the state of crypto lending, and the amount of debt and Bitcoin debt right now in the system is way less than it was before the collapse of FTX, BlockFi, Celsius, etc. So that component, I don't think, is going to have that much of an impact now. There is not that much leverage, and indeed on the crypto perpetual side, the leverage flush out already happened on 1010, and the unsecured or the debt stuff secured through Bitcoin is unlikely to be as severe as it was in the prior cycle.
Well, how do you know how much debt there is? Because I see all these companies that advertise, just send us your Bitcoin and we'll lend you money.
I would need to look into the intricacies of like how they reported that, but they could capture it in terms of the previous cycle. But aren't that many entities now doing this kind of lending, Bitcoin lending, in terms of the total size compared to the previous collapse. And then your point about ETFs, I think yes, it's a point that yes, people could sell, retail could sell, they could see how down they are. But then there's also the component of, okay, they could consider buying the dip. And then also it also depends on their financial advisors who say, okay, we recommend X percentage of your portfolio should go towards Bitcoin, and they follow their financial advisors. And if the Bitcoin price falls, then
I think there are very few financial advisors that have actually recommended Bitcoin ETFs. I think most of the buying has been unsolicited. And in fact, most firms wouldn't even allow their financial advisors to recommend Bitcoin because they're worried about liability and getting sued. And so it's mostly unsolicited buys. And so I don't really see.
I think I did just see Morgan Stanley and a few of these other larger banks did say that they would recommend X amount, whether it was through their financial advisor network or whether it was just an institutional recommendation that was issued.
I think that's a new thing. Recently, where some have said maybe we'll recommend it, but I don't think that many financial advisors have done that. And I think this decline is going to catch most people by surprise. I mean, nobody expected it. People thought that, given the regulatory environment and, once we got above 100,000 and they were popping the champagne a year ago at these Bitcoin 100,000 parties, I think a lot of people didn't think that, 80,000 or 70,000 or wherever we're going, Bitcoin was even a possibility. And so I think a lot of people will be reluctant to make a bigger bet when their earlier bet is already not working out. So maybe some people will hold, but I don't look for a lot of, investors to be trying to buy this dip. It's more like catching a falling knife. I mean, how many are gonna step up and do that,
Fair. Okay. Then the other point you raised in terms of the DATs. I mean, so but sailors obviously and strategy is the biggest DAT of them all, and I think that the way it's structured is not a lot of debt to the extent that it would be forced liquidations when Bitcoin price, and even if it was the case around the negative, first of all, they're trading above the MNA, above the MNAV is above one, and the value of the assets, the value of the enterprise value is greater than the net asset value, so they're still in positive territory. And the price of Bitcoin would have to fall considerably before they get into negative or near negative equity. And the fact that they've used these preferred instruments as well, which can't be called. So I think that that's another component of why, in terms of strategy itself, which has proven through previous cycles, and Michael Saylor over there, that they can hodl through it or hold through it. And I think right now, there's nowhere near the levels of liquidation. The other DATs, especially the ones on the altcoin side, some of those that are trading below the net asset value, those could be a concern. But even then, the size of them, the absolute size of their holdings compared to strategy is minuscule.
Yeah, yeah. I mean, look, strategy was able to survive that last downturn. It didn't last that long. In fact, he got bailed out, I believe, by all the ETF buying that happened, and then Donald Trump becoming president. But I mean, look at the other companies, Bitcoin treasury companies, which I think was an asinine business model. I mean, I don't even think that you have a viable business if your whole business is just buying Bitcoin, which anybody can do on their own. You don't need a corporation to buy Bitcoin for you. Just go out and buy it, or buy the ETFs if you don't want to keep custody of it. So I think all these Bitcoin treasury companies are going to go out of business, including Strategy. I mean, Strategy might go out of business last, but a lot of the copycat companies are going to go out of business. And in fact, look at what's happening. I was at the Bitcoin conference in Vegas in May, right? And we're both going to be at the blockchain week in Dubai in December. But in May, right, when Bitcoin was, around 105, 110,000, I was there. And all the talk of that conference was the new Bitcoin treasury company that was launched by the owners of Bitcoin Magazine, who they were promoting their new company at their conference. And it's called Nakamoto, right, for Satoshi. And the stock was over $30 a share, right? That's what people were paying. The high was $31.45, but it was, it was over $30 a share. People were buying this stock at $30, right? It's at 45 cents right now. So, I mean, pretty much you've lost everything. Whatever you put in, it's pretty much gone. I mean, but there was so much hype around this thing. And these type of losses are going to take a toll in the Bitcoin community and the appetite to fund these kind of investments. Now, that's probably the biggest decliner of them all, but pretty much all these stocks are down 70, 80%, 90%. I mean, they're just getting decimated. I don't see, with all the positive news that Bitcoin got this year, I mean, it couldn't have got better, right? And that's what I was saying earlier in the year. I was saying things couldn't possibly be better for Bitcoin. Everything you could possibly hope for has already happened. So what could go right? Nothing. All that can happen is something goes wrong, because it was already priced for perfection. But, meanwhile, the big money has been selling into this hype all year. That's why, that's what's going on, right? People that bought Bitcoin for $100 a Bitcoin, $500, $1,000, they just been selling. That's why they bankrolled Trump's campaign, because they knew that if he was president, they'd be able to get out of their Bitcoin at a better price than if Harris was president.
Interesting theory there. Okay. Well, I mean, look, I'm not going to defend the DATs. I mean, I personally never thought they made lots of sense. I mean, say strategy is the unique beast in that case, in that sense. But yeah, I mean, I've looked at some of these others and they've been really terrible structures. Okay, moving on from what's happened in the markets right now to Bitcoin, for Bitcoin, but more specifically honing in on the comparisons from a fundamental perspective and a fundamental investment perspective for gold versus Bitcoin. And I'm curious, how do you respond to crypto proponents who argue that Bitcoin has digital scarcity and utility that give it value distinct from gold?
Well, it is distinct from gold because it's nothing like gold. So it's not really digital gold. It's something completely different. So I think it's a fraud to, kind of represent it as some kind of digital version of gold. And obviously, this year where gold's up better than 50% and Bitcoin is down, you know, highlights the sharp difference even in the market, the way the two assets trade. Gold is more of a safe haven store of value, and Bitcoin is a highly speculative, risk on, whatever it is. So the investment characteristics are very dissimilar. And of course, the fundamental characteristics are completely dissimilar because, in that respect, they're not the same. And of course, central banks hold substantial reserves in gold. In fact, now they hold more reserves in gold than US treasuries, but they don't hold any reserves in Bitcoin. So it's not a reserve asset. It's not an industrial commodity, a precious metal. So it really has nothing in common with gold other than the fact that the promoters are trying to create, the false impression that it is digital gold to try to justify its valuation. But that's more of a meme than a reality. And, Bitcoin is down better than 40% priced in gold. It's substantially lower than it was when it hit its peak 4 years ago. And so I think it's going to be hard to justify it. As far as the scarcity is concerned, gold is actually scarce in nature. There is a limited quantity of gold on the planet and probably throughout the universe, right? It's not like, it's hydrogen or, helium. It's just, it's a very scarce element. It's very scarce for metal naturally, right? God made it scarce, right? Bitcoin is scarce only in the sense that we've programmed it to be scarce. But there's 21 million Bitcoin, and it sounds like there's not that many, but there's 2.1 quadrillion Satoshis. That's a lot of Satoshis. Bitcoin itself is an arbitrary construct. It's an arbitrary bundle of 100 million Satoshis, but there's no scarcity of Satoshis, right? They're all over the place. And so if a Bitcoin was a Satoshi and we said, hey, this Bitcoin is scarce, there's a 2.1 quadrillion of them, people would laugh at you trying to claim it was scarce. So there's plenty of Satoshis to go around. Everybody in the world can have few hundred thousand of these things, no problem. So it's not real scarcity, but also gold's properties can't be replicated. I can't just create another metal that does what gold does, but I can create another token that does what Bitcoin does. In fact, they already exist. There's tons of them. There's thousands of these things. And so Bitcoin competes with all these other tokens, whether it's Ethereum or, Solana or Doge or Fart Coin or Trump Coin. There's all this crap that people could buy. And you can say, oh, those are just shit coins, but still, right? That's a crypto. And there's also, Bitcoin Cash, Bitcoin Gold, Bitcoin BSV, whatever, all these different Bitcoin, forks that have come off of the thing. You can't fork gold. There's no other gold. There's just gold. You want gold, you got to buy gold. That's basically it. So it's real scarcity. The Bitcoin scarcity is just a marketing gimmick, but also scarcity in and of itself doesn't make something valuable, right? I mean, I can make an original Peter Schiff drawing and it could be a one of a kind, but scarce, there's only one of them, but what the hell is it worth? I don't know. I'm not Picasso. I don't know what people are going to pay for it. You need demand. You need scarcity and you need to have a lot of demand. Well, all the demand for Bitcoin comes from speculators who think the price is going to go up. That's the only reason most people want to buy it. But if speculators no longer want Bitcoin because they no longer have confidence that the price is going to go up, all the demand is gone. So who cares what the supply is? The supply is worthless if nobody wants it. So, this is a decentralized Ponzi pyramid scheme, greater fool. It's not gold 2.0, it's tulips 2.0.
I mean, so coming back to a few of the points there around the supply, and you mentioned that Satoshis they are infinite because you can infinitely divisible Bitcoin, but so is gold to a degree that you can also bring, whatever a gold bar you can divide, break it down into many different pieces.
Here's
so
the difference
also
there.
Divisible.
Here's the difference there. Yeah, in theory, you can divide gold into those small quantities. Although tokenized gold, yes. I mean, real gold, if you tried to take an ounce of gold and break it up into 100 million tiny specks, you'd lose them. I mean, it would be something that would be almost impossible to do because you're talking about microscopic. I mean, I don't know if we could do it, but obviously if you tokenize gold, sure, I can take a gold token, which I'm going to be doing with T-Gold. People should go to my new website, tgold.com, but I can take an ounce of gold, tokenize it, and then you can take that token and I can break it into the same 100 million, units as Bitcoin, and you can transact in it. But here's the difference. The value of gold comes from its use case as a metal, as a precious metal. And so it depends on, how much gold you need. So if you are a jeweler and you're making bracelets, you need a specific quantity of gold to make those bracelets. You can't just buy little specks of it. You need a certain amount of it. And it's because you need a certain quantity of gold. If you could just do whatever you wanted with a tiny speck, right, then it wouldn't be as scarce. If I want to actually use gold, I need a certain quantity of it to actually do what I need to do. But for Bitcoin, you don't really need any particular quantity because you can't do anything with it no matter how much of it you have. It just, all you can do is trade it. So that's the difference between a speck of gold and a speck of Bitcoin. A speck of gold isn't going to help me if I'm a jeweler. I need a lot of gold. But if I'm just gambling on Bitcoin, I can gamble on one sat. If I have one sat, I'm in the game. I'm playing, right? It can go up. I can sell it. So, it's very different.
Okay, but in terms of Bitcoin's properties as a digital asset, right, that is cryptographically secure, obviously there's the hard supply and all that, but in terms of it being digital, natively digital, means that it's easy to store and move around. I mean, so obviously about gold can be seized and it's hard to move. I mean, FDR back in 1930s issued an executive order which tried to seize all the gold. And Maduro, despite what you think of him, he had gold in the London vaults that was seized by the UK government.
Yeah.
And if you're a person who's trying to store wealth in terms of a store of value, and you're trying to imagine fleeing a war zone, carrying gold is not as easy as storing Bitcoin in a brain wallet. So I think that the qualities of the asset as Bitcoin is natively digital is something that gold doesn't inherently have.
Well, I'll address all that. I mean, first of all, yes, Roosevelt seized gold in the 30s, but they didn't seize it in the sense that government agents went door to door, like shaking people down for their gold. People had to voluntarily, it was a law, so they were required to show up with their gold and hand it in. But most gold wasn't handed in. People just kept it and nothing happened to them, right? Nobody went to jail. Nobody paid a fine for breaking that law, right? So people kept their gold. And that's why we still have so many, old gold coins, because all the gold coins that were turned in were melted down and they were turned back into bullion. But we have all these coins today because the people didn't obey the law. So it's very hard to enforce a law that requires you to turn in your physical gold because the government doesn't know that you own it. They don't know where you have it. It's very private. On the other hand, seizing Bitcoin is relatively easy. I mean, the US government is one of the biggest owners of Bitcoin. All of it was seized, right? There's lots of Bitcoin. Governments all around the world have seized Bitcoin. So to say that you can't seize Bitcoin, that's not true. I mean, there are lots of it. And, it leaves a trace. I mean, people have been busted for crimes because they were using Bitcoin for payments. If they were using physical gold, they would have had no clue. So it's not as secure and confiscation free as people think. And there is no real history of governments going to people's houses and like shaking them down and looking for their gold. That hasn't happened. But I do agree that it's easier to port Bitcoin than gold. I can transfer it easier. Yeah, when you're transferring nothing, it shouldn't be that expensive. I mean, if I'm transferring gold, I'm transferring something. It's a physical commodity. So yeah, I got to put it in a box and send it, got to insure it. It's going to take time to get there. So yes, Bitcoin has the advantage because it doesn't have any substance. It doesn't have any real value. But that's where tokenized gold comes in. I could tokenize my gold and somebody can hold the token and they can transfer that. They could take that across borders. Nobody knows about it. They can send it. They can receive it. It's just as portable. It's just as divisible. In fact, it's faster and cheaper than Bitcoin.
Do you need if you want to redeem that gold, and you'd have to redeem it at some sort of mint or something, right? And you'd have to rely on a centralized party to get that gold,
Yes.
which is,
but you never actually, unless you need the gold, right? Unless you're a jeweler, unless you manufacture, computer chips or something, you don't actually need the gold. You could just hold on to the token, right? You never have to go and redeem it, and it still works. But the value of the token is derived from the gold that the token represents ownership of. So if I own tokenized gold, I actually own gold. So that really is digital gold. If I own Bitcoin, I own nothing. I can't take my Bitcoin to anybody and get anything of value for it.
I think that Bitcoiners would have the argument that tokenized gold of some description is that you have to be reliant on a centralized issue, minter and redeemer and custodian of the gold,
Yeah,
which
well, I
is,
bet, well, first of all, everybody who owns a Bitcoin ETF is relying on a third party. Everybody who puts their Bitcoin on an exchange is relying on a third party. Plus, a lot of these people who own Bitcoin also buy insurance policies. They have auto insurance, they have fire insurance, they have health insurance. They're trusting third parties to pay the claims if they submit them. I mean, capitalism is about third parties and trusting third parties. That's how it works. And so it works fine with trusting a third party to store your gold. Now, obviously, you just don't let any old Joe Smo hold your gold, just like you just don't buy an insurance policy just from whoever shows up at your door. You do some research into the market. You try to find a reputable company with a good balance sheet and a long history of paying claims. And so it'd be the same thing. If I'm going to hold a gold token, whose token is it? Who issued it? What's their track record? What's their balance sheet look like? What kind of insurance do they have? Who are the people, right? That's all you do. Because yes, if I own Bitcoin, I don't have to trust a third party, assuming I self-custody. But the ultimate trust is that I have to trust that there's a group of people in the future who are going to want the Bitcoin. I have to trust that people will continue to believe that nothing is something and have faith. I don't want to take that leap of faith. I would rather trust a reliable custodian to hold something than trust that a group of people, right, believe that nothing is something. Because who knows what people are going to believe about Bitcoin in 5 or 10 years? Nobody may even care about Bitcoin. The price may be zero. I don't have that risk with gold. There's no way that gold's going to zero. It's just, there's no precedent for that ever happening through all of recorded history.
yeah, fair. Okay, it's a long debate. We can get into it as much as possible in terms of Bitcoin versus gold. But just honing in on something else you've said recently as well, it's more specifically, and you've mentioned this before, strategy, MicroStrategy. And you've essentially basically accused it of operating like a Ponzi-like model with its preferred shares. And I'm just curious to understand exactly what you mean by that.
And by the way, I challenged on X Michael Saylor to a debate on this very topic. He's been ducking me on debating gold versus Bitcoin. And so I, posted on X, hey, Michael, we're both going to be in Dubai for blockchain week. I'd like to debate strategy. I think it's a scam. I don't think it's a viable business. I think it's going to go bankrupt. I'd like to debate that with you, right? So I don't expect him to pick up that gauntlet. But, the reason I think that strategy is really just a pyramid is it doesn't have a business. Yeah, there's a tiny software business that nobody gives a damn about, doesn't even make money. I think their software business loses money. So forget about that. MicroStrategy's real business is buying Bitcoin. That's its business. And how does it buy Bitcoin? It issues shares, common shares. It issues them at a premium, at least it has been, because the stock price, they might have had $1 worth of Bitcoin. Each strategy share was trading at $1.50. So that meant strategy could sell stock at $1.50 and then take that $1.50, and buy $1.50 worth of Bitcoin. And now that the Bitcoin that he owned per share would keep increasing. And that was the source of his Bitcoin yield. And that was the validation of our business. We're generating a Bitcoin yield because the Bitcoin that we own per share keeps going up. And that was true. Of course, the debt was piling up too, the preferred stock and the convertibles, but nobody really cared about that. That business model can only continue so long as the stock is trading at a premium. And once it's trading at a discount, then it no longer has the ability to generate this yield. And so the very foundation of its existence, disappears. If MicroStrategy can't generate a Bitcoin yield, then what's the point of owning it? Just own Bitcoin. Why are you buying strategy, right? Now, if strategy trades at a big enough discount, right? If it's trading at, 20, 30% below, people might decide to buy strategy instead of Bitcoin because, hey, I like Bitcoin. Well, I can buy it for 70 cents by buying strategy, right? But that takes demand away from Bitcoin now because it's like this big closed-end fund that's at a discount. But the problem is they've issued a lot of these convertible debt where they've promised to pay dividends, but they don't really have to. If you look at the language on the convertibles, strategy has to declare a dividend. And if they don't declare it, you get nothing. And I think they're going to stop. They're not going to declare any dividends. They're not going to have any way to pay it. They're not going to want to dilute the stock that massively. And so they're just going to stop all payments on all the preferreds, which is going to destroy the demand for those things. All these income-oriented funds that own them are going to have to sell them because they're not going to have any kind of yield anymore. The 8-10% yield was all bullshit anyway. But Strategy does have a lot of convertibles that are going to mature. And they're going to have to pay billions and billions of dollars of cash starting, I don't know what if it's 2028 or when the first ones start rolling over, but 2028, 2029, 2030, they're going to have to come up with billions of dollars. Well, where are they going to get that money? They don't have any money. All they have is Bitcoin. And that Bitcoin is going to keep losing value. So they're going to have to sell the Bitcoin eventually to repay the debt. And so, so that's the Ponzi nature of this thing. In fact, the interest that they're paying now on their convertibles, they have to borrow the money to do that. The company doesn't generate any income. So the only way they can pay a yield is to borrow the money.
I think that they do, the operating entity itself, they still do have a software business that generates $500 million. They
have operating losses. If you look at their financials, Xing out the unrealized Bitcoin gains, which they count as earnings, which is ridiculous because obviously now they've lost a fortune this year. If you're going to play that game, the losses are monumental year to date. If you just take out the unrealized appreciation of their Bitcoin, they're operating at a loss, even with whatever income is being generated by the software business.
Yeah, fair. But I mean, in terms of like the question around the cost of service and the preferreds or paying the interest on that and concerns around that, I mean, they just released today that they have, in terms of their current cash reserves, they have 71 years of dividends coverage, assuming, right now in terms of what they've got. So
who says they have 70 years of coverage?
I mean, strategy disclosed that in the recent financials.
But where are they going to get the money to do that?
I mean, they've got cash, right? And they've, like I said,
they don't have cash. They spent all their cash on Bitcoin. That's what
I'm sure you'll get into the maybe Sila will accept your request for a debate at Dubai, and then you can get into the weeds of their financials. I'm not going to be a strategy spokesman. Yeah, I'm just saying. I think that they've proven themselves to the previous cycle, and we'll have to see how this plays out. But I would love to see that debate. So hopefully he accepts. Now I want to move on to another topic, obviously, that you're well versed in and you've talked about a lot here, and that is gold and what's driving gold. And it's really interesting, in fact, as well. And it's up 50% year to date. So I'm curious from this perspective, 50% is a lot for an asset the size of gold. So do you see this as a sustainable move?
Yeah, I mean, I think that it's the last 2 years, really. Gold broke out above 2,000 a couple of years ago, and it's more than doubled over that time period. It broke out of the consolidation that it was stuck in for a dozen years. And again, it was those 12 years where Bitcoin flourished because gold wouldn't do anything. But now gold is performing. People who own gold are satisfied with their returns. They're beating the stock market. They're beating Bitcoin substantially. And so there's a lot of demand. But what drove gold up here is not investor demand. It was central bank demand. In fact, for most of the last 2 years, retail investors and even institutional investors were selling their gold. They were taking money out of gold and buying Bitcoin. And so they missed out on this huge gain. But now, looking backwards, they're regretting that decision. But since gold has performed so well, it's attracting the attention of Wall Street. In fact, JP Morgan recently said that the 60-40 portfolio should be tweaked. It should be 60-20-20, and that you should sell half your bonds and put the money into gold. So you're starting to see investors realizing that they should own gold and they need to own gold, and they will be buying gold. Meanwhile, the central banks that have been buying it the last couple of years are going to keep buying it. And a lot of central banks that weren't buying it are going to start. So I think the demand for gold over the next several years is going to really accelerate. And what it really is a rotation out of US dollars and out of US treasuries. That's why foreign central banks are buying gold. They don't trust the dollar. They don't trust treasuries, given the exploding debt and the Fed monetization and all the things that we're doing. Destroy confidence. We've destroyed confidence in the independence of the Fed and in our ability to get our fiscal house in order. So, the dollar is doomed. It's everybody's trying to get out of the dollar. And the only way to get out of the dollar is to get into gold. And that's what's going on. So this is very significant. It really is a canary in a monetary coal mine. And I think people are glossing over the risk. When you hear all these Fed chairmen say, oh, inflation expectations are well anchored and contained, and so we've done a good job. $4,000 gold is telling you that nobody believes you, because if people believed that inflation was contained, they wouldn't be paying up for gold. The reason they're buying all this gold is because they know the Fed is full of it. Inflation is going to be a lot higher, and so people don't want to lose that purchasing power, and so they're getting out and they're buying gold, and that's how they can protect themselves.
So I'm curious then in terms of like the actual buyers, because I was reading an article earlier, like this week, about the central banks themselves are, especially the Chinese central bank, are trying not to disclose this because they're, privacy and concerns like that. I mean, in terms of, do you think there is this massive bid just coming from the PBOC for gold right now, or do you think it's central banks more broadly, like all the others as well? Or where do you think this hidden bid is coming from? Because the disclosures in terms of the IMF for gold purchase from central banks are nowhere near what would justify the price of gold right now.
Yeah, well, I think the Chinese are being deliberately coy about how much gold they're buying. China is the world's largest producer of gold, but they don't export any of it. So who the hell knows how much is being produced, because the Chinese government is pretty much buying it all. But if the goal of the Chinese government is to buy a lot of gold, the last thing they want to do is let the owners of gold and the sellers of gold know that, because they obviously want to buy it as low a price as possible. And so the way to do that is keep your intentions secret. Play your cards, close to the vest so people don't see what you're holding. And so they have no incentive to let the world know how much gold they bought, because then they're like, oh my God, what are they, we better not sell them anymore. They've got way too much. So I think they're being deliberately, deceptive about what they hold. And I think their goal really is to create the world's dominant currency. I think they want to supplant the US dollar as the main currency of the world. The best way to do that is to own enough gold where they can now back their currency by gold and make it convertible at some fixed rate with gold, mimicking what we used to do with the dollar. The dollar became the reserve currency only because it was backed by and convertible into gold. Now, there were other things that we had going for us, but without that gold backing and convertibility, the dollar never would have been the reserve. And so China wants to replicate that, I think. And so they need to accumulate a lot of gold. And so that's what they're doing.
That's on the, if one could say it, the de-dollarization angle of the gold trade now. How much, in terms of what is driving gold's price right now, is that the de-dollarization by central banks, or indeed investors who want to thinking about de-dollarization as a narrative, versus geopolitical risk versus inflation fears? And I think the de-dollarization trend kicked off in terms of what we could see in the chart. 2022, Russian central bank seized their assets. Mm-hmm. But how much of it did you think, from an investor's perspective, is driven by these three different factors: geopolitical, inflation, or de-dollarization?
Yeah, the de-dollarization narrative, which I believe in, didn't really, make it to the forefront of discussion until very recently as a way to explain, oh, shoot, look what's happening to gold. What's going on? So to the extent that private investors are playing de-dollarization, they just started. Right? So it's still early in the game. The central banks have been de-dollarizing for years now, and nobody talked about it. Right? Nobody appreciated it. So yeah, I believe it. I've been warning about it. I've been advising my customers to de-dollarize for years. I was way ahead of the curve here on de-dollarizing. That's, and I've been having my clients buy gold, since it was under $300 an ounce. Now, yeah, it didn't go up as much as Bitcoin, but it went up more than the S&P 500. So it's been a pretty good thing for people to have owned over time, because it's been a lot better than the US dollar.
And then on inflation side of it?
Yeah, well, de-dollarization is being driven by inflation, right? Because inflation is going to be quite high in the US, and that's going to erode the value of your dollar. And the interest that you're able to earn on dollars by buying treasuries won't even come close to offsetting what you lose to inflation. And the reason is we can't. If we had to allow interest rates to rise sufficiently to compensate holders of treasuries for what they're going to lose to inflation and dollar depreciation, we couldn't afford it. We just don't have the taxing ability. We don't have the tax base that could handle the increases in taxes that would be necessary to make that kind of interest payment. We're already paying $1.2 trillion a year now in interest. If and it's rising, but if we had to pay 3 trillion or 4 trillion, I mean, that's almost our entire tax base is about 4 or 5 trillion. That's everything. So, I mean, there's a limit, right? I mean, to what we could spend on interest on the debt. So, I mean, the world is starting to appreciate the dynamics that are at play here. And yes, it's gone on for a long time. People have been criticizing the debt since the Carter administration when it was well under $1 trillion. Ronald Reagan was very critical he was supposed to lower the debt. He ran a campaign on Carter's deficit spending and, the big national debt. And of course, it went up under Reagan too. But when Reagan started, it was still under $1 trillion. Now it's 34 trillion, but it's going up, ballistically. We're adding $1 trillion every few months.
Yeah, that's true. It's a runaway train. Nothing stops it. Okay, so
then
it
does eventually crash. That's what stops
it. Exactly. When you get to that point, yes. Is there a price of gold in terms that you would consider it to potentially be overvalued or bubbly in your view? I mean, is there any type of price target that you would consider? Okay, guys, it seems a bit, right now it seems a bit overvalued.
Yeah, well, I think you can't really think about it in terms of a dollar price because you don't know what the dollar is worth. I mean, $1 million an ounce could still be cheap, right? It's just all relative because the dollar is just, a piece of paper. So I would look at gold relative to other commodities, look at it relative to silver, copper, as metals, but you could look at it relative to oil, relative to wheat or soybeans, things like that. Then I would also compare it relative to other asset classes, compare it to real estate, compare it to stocks, right? Things like that. And look at it where it is in its historical context. Is gold historically expensive relative to other assets? Is it historically expensive relative to other commodities? So that would be a better way to kind of look at it and decide if you think gold is expensive or is it cheap. Like for silver, one of the reasons I think silver is cheap is because of how many ounces of gold, how much silver you can buy with an ounce of gold. So I can look at $50 silver, 50, and say, hey, that's really cheap. And you say, wow, that's like a record high price. Not in terms of gold. It's still pretty cheap in terms of gold. And so you always have to think of things, in terms of a relative to something, because the dollar could go to zero. I mean, how many, what's the price of gold in Zimbabwe? I mean, I don't know, trillions of dollars an ounce, but it doesn't mean anything because the currency doesn't mean anything. So, I mean, gold is still very cheap relative to assets, relative to, the total capitalization of the global stock market, or you could look at gold relative to US GDP. There are a lot of measures that you could look at and you'd see that gold is still pretty cheap.
Yeah. No, that's a fair point. Definitely. When the asset itself, evaluating it against is deflating or inflating away, then it's hard to measure it against that. But in the shorter term, then I suppose gold's, and I wonder if you have a view on the next 6 months, because a lot of it is driven by like what's going on with interest rate policy and inflation, right? And we've got the Fed meeting coming up in December, next few weeks. Now the expectation is that it's about 50-50 whether they're going to have a cut. What do you say to those people who say that if they don't cut as expected, precious metals could pull back?
I mean, they might. I mean, I don't know. I mean, they could, but they could fall back even, if they do cut. I mean, I don't know. I mean, personally, I think they should be hiking rates. And so the fact that they're not hiking rates is bullish for gold. They should be hiking. Rates are too low. So even if rates stay where they are, I think you still have a bullish environment. I mean, the Fed thinks that their policy is moderately restrictive now. I think they're wrong. I think it's accommodative. And the longer it stays accommodative, the better it is for gold. Yes, if the Fed doesn't cut, gold could go down that day. I don't know. I mean, it could go up. Maybe it depends on where it is on the day the Fed makes that announcement. I think if it's around 4,000 or a little less, I think it's more likely to go up. I mean, if gold 4,300 or something, because people expect a cut and then we don't get it, then maybe it does drop back down, But I think the uptrend is there. I think gold is going to continue to rise. I don't think you're going to have that big a correction. Yeah, we had a 6.5% drop. What is it, a month ago? But that was only because of how much it rose in the 3 or 4 days preceding that drop. So, which was an aberration. All of a sudden, gold just got ahead of itself and pulled back. But it's interesting that it's still doing all this volatility above 4,000. I mean, that was a record high up until a month or so ago. And we just corrected to that, to that level. There's just too much money that wants in on gold. The people that own gold don't want to get rid of it, and the central banks certainly won't. I mean, they're not sellers at all. They want to buy more gold. They want to hold it. And so the fact that the price of gold has gone up, they're not going to cash out. They don't want the cash. That's that they wanted to get rid of the cash. That's why they bought the gold.
Fair. So, I mean, you've a good point there that you raise about the Fed, that they should increase rates. So you think that the Fed is reading it wrong, that inflation is still too high, and that they're reading it wrong entirely in terms of the monetary policy right now?
Exactly. Yeah. I think the monetary policy is much too loose. And I think the reason it's too loose is because they know the consequences if they tighten too much. If they try to get an appropriate level, they would prick the bubbles in the stock market, the bond market, the real estate market, crypto market, which may have just pricked on its own. But all these asset prices would collapse, and it would usher in another financial crisis. And that's the last thing they want. So policy is too loose. And so that's a very positive environment for gold. And I think when the US dollar really starts to fall, which it fell in the first half of this year, but this back half, the dollar's, gained back a bit of what it lost. And I think once the dollar really starts to weaken, that's going to, accelerate gold's rally.
Yeah. A few more questions here. In terms of speaking about the dollar and gold in the longer term, do you think that the end state, the dollar itself, will lose its reserve currency status, or is in the next few years, or is this more of a gradual long-term shift towards hard assets?
I think the process of removing or the dollar losing that status is already underway. So the question is, how long will it take for the process to complete, or for people to recognize that it's happening? And I think once there's a recognition, that's going to speed up the process, right? Because then, people will rush to get rid of the dollar once they understand what's going on. But I already think it's happening. That's why central banks are buying gold. That's what they're preparing for. They're preparing for the world where the dollar is no longer the reserve currency. And I think that is going to be a net positive for the world, because I believe it has cost the world. I think the world has had to bear a burden of maintaining the dollar status, because in order to do that, they have to run surpluses with the United States. They have to produce more than they consume and let us enjoy the difference so they can accumulate the currency that only we can print. And then they end up loaning it right back to us by buying our treasuries. And so they have less stuff to consume, and they have less savings to invest productively in their own economy. So I think when the dollar is no longer the reserve currency, that stops. And so I think other countries will see an increase in their living standards as their consumers recover access to more of what they produce, and as more of what they save is invested locally, productively, not just loaned to the US government to spend on consumption. So the rest of the world wins. America, of course, is the biggest loser because we have relied on the dollar's reserve status as a crutch. It's the reason that we can live beyond our means. It's the reason that we can consume without having to do all the hard work of producing. It's the reason that we could just borrow without having to save. It's the reason that we have this consumer-based economy. It's only made possible by the production-based economies of the rest of the world that finance the whole thing. So the rest of the world's going to see an increase in their standards. We're going to see a big drop. And that's why, I've invested my clients' assets abroad so they can benefit from the appreciation of foreign assets, foreign currencies, and they can ride that wave, right? Foreigners getting richer. Well, if you own foreign assets, then you get richer too, because your assets will rise in value compared to US dollar denominated assets that are sinking in value. So that's, the basis of my managed account strategies and my mutual funds is to do just that, to have my clients divest of US dollar assets and to build portfolios of non-dollar assets that are going to benefit substantially from this transition.
Yeah, indeed. The Triffin's dilemma, the curse about the US dollar's reserve status for the US economy. How long have you had this, just generally like your view on gold? Was there like one moment, like an aha moment back in your earlier days that you became such a gold bull, or was it something that you just formed over the years and you just got more bullish the more you thought about it?
Well, I've always understood gold since I was young, and I've understood constitutionally that gold is money in the country. We're next year it's going to be the 250th birthday of our nation, going back to 1776. But when the Constitution was ratified and we had the first Coinage Act of 1789, the dollar was defined as a weight of gold or a weight of silver. That's what it is. The dollar is actually a measurement for a specific weight of gold or silver. And so, that's the history of the United States, that gold is our money. So I've understood that, and it's much better money than what we got now. But when I really started pushing gold in a big way was during the latter 1990s, when the Fed was helping to inflate the dot-com bubble and gold was sub 300. I just thought it was ridiculously cheap. Nobody wanted it. Everybody wanted the new economy stuff. Nobody wanted something as old-fashioned as gold. So I really started advocating gold ownership, that people buy gold. And eventually I set up my own company, Schiff Gold, in around 2010, because a lot of people that I was telling to buy gold were going to buy gold and getting ripped off. They were getting overcharged. And so I said, well, I'm not going to let this happen anymore. So I'm just going to set up my own gold company. And so instead of just telling people to go out and buy gold, I was saying, buy it from Schiff Gold, and now you won't get ripped off, right? So that's what I started doing. And it's been very successful. Again, it's gone from under 300 to over 4,000. When I started recommending silver, it was below $5 an ounce. Now it's around 50. So, you got a tenfold increase there too. More than that in gold. But, so both precious metals, have really added a lot, even though we went through about a 12-year period where, they did nothing, right?
Yeah, no. It's interesting. I mean, I wondered, did you ever think or consider in the 1990s when you were like talking about gold and singing the good praises of gold to all those individuals, that you'd one day arguing with personalities on Twitter, anons on Twitter about the virtues of gold versus internet money, magic internet money, and attending these conferences with these magic internet money adherents debating the pros and cons of your gold versus their digital.
I never imagined that. I wish I had imagined it in 2010 when I first heard about Bitcoin and actually sat at a screen watching it and thought about throwing 5 or 10 grand or maybe 50 grand on, into it. And I ended up convincing myself not to do it. So, that was obviously in hindsight a very bad decision that I made.
Yeah, I mean, that's you need to have belief in it, right? Like, that's come back to your point around, it's just built on belief. But that belief has made a lot of very rich people very rich, and the OGs are
yeah.
I mean,
I know a lot of those people. A lot of them are good friends of mine. A lot of them are neighbors of mine and friends of mine. And they didn't even know about it as early as I did. I mean, most of the people that I know that made hundreds of millions in Bitcoin got in above $100. Very few people that I've talked to knew it, because when I knew about it, it was really because of the libertarians that were active in my Senate campaign in 2010 that started telling me about Bitcoin. And so this was, this was a hardcore, anarcho-capitalists, libertarians who were attracted to it, not because they were going to get rich. It was just like, hey, this is what we're doing, right? This is our, so you had to be in those circles to know about it, right? Otherwise, who the hell heard of it? I mean, so when it really came on the scene is when it really jumped up in 2017 up to, or not 2017, I forget the year, was it 2013 or 20?
2013,
It jumped up to 1,000 all of a sudden. And all of a sudden people were talking about it. And then it pulled back to 200 or 300 and it stayed there for a couple of years, right? That's when like the Winklevoss got involved. And that's when other, people decided to get in and promote the thing. And they did a hell of a job promoting it. And again, when a friend of mine told me that a guy that we knew, very wealthy guy who had a hedge fund, he said, hey, my friend, he's buying Bitcoin. And I said, really? Is for his hedge fund? I said, they're buying, you got to be kidding. They're buying Bitcoin? He was like, $300, $400. And he said, yeah, they're buying Bitcoin. I said, and I was like, holy shit. I said, maybe other people will be dumb enough to buy it, because this guy's pretty smart and he's very wealthy, billionaire. He's buying Bitcoin. I thought maybe I should buy some. I mean, because maybe other people will buy it and the price, maybe I should buy it. And what stopped me from buying it then, right, was that, I said, I didn't buy it at $1 or $5 or whatever it was. I ain't going to pay $300 for this. I just didn't want to buy it at so much higher than I didn't, because obviously I didn't, appreciate how much it could go up. But that was the last time I thought about buying it. I mean, I never thought about buying it after it blew up. It was like, oh, well, I missed that. But I never looked at it again because I always thought it was just, a pure bubble. I would just be betting on other people, stupidity, right? More fools coming in. And, it's hard to buy something when you know it's eventually going to go to zero. I mean, it's much easier to buy it if you actually believe in it. If you actually think it's going to 10 million, then it's easy to buy it. You just buy it and hold it.
Well, I mean, Peter, never say never. Maybe CZ can convince you at that debate in the conference to make a buy. But either way, Peter, this has been a very engaging conversation. I really learned a lot. And so where can people, obviously I'll leave your Twitter down below if people can follow your takes. Do you have any other places where people can follow your thoughts?
Well, I mean, first of all, I mentioned T-Gold, tokenized gold. Go to my website, tgold.com. We can take a lot of different countries. You can open up an account in a few minutes and you could buy a little bit of gold and silver. I will eventually use that as the basis for tokenized gold and silver, which you'll be able to withdraw. But for now, you just own the gold and silver. It sits in a vault. You're buying it for, barely above spot. I don't charge any custody. So you're getting a good deal on your gold. You own it. It's yours. You can sell it whenever you want. I'll send you back your money. Eventually I'm going to have, you're going to be able to transfer it, receive it. I'm going to try to issue debit cards and secured credit cards that you'll be able to use. So I'm going to have a fully functioning monetary system. So you go to tgold.com. If you want the delivery, you just go to Schiff Gold, which, will mail you your gold, ship it out to you. You can store it yourself. If you, want my company to manage a portfolio of foreign stocks, go to Europe Pacific Asset Management. In fact, my foreign dividend payers fund is up about 50% this year. It's up about the same as gold. But this is, stocks, dividend paying stocks. So it's doing really well as money is starting to look for value and coming out of a lot of the hype and momentum. I think that trend is going to continue. So that's my asset management company, europac.com. I've got a newsletter that people should subscribe to, at least, number one, the free version. Just go to shiftsovereign.com and you can sign up to get the free newsletter. There's some paid services you can learn about as well, but at least start with the free letter. And follow me. Yeah, follow me on X. Now I got over 1.2 million people, over 1.25 million actually followers. So I'm constantly posting. I'll be as soon as we finish this interview, I'm going to post some more. So I put my thoughts on the internet, and you should follow them because I have good takes on a lot of stuff. A lot of it has nothing to do with Bitcoin, but it's important, I think, for people to understand it. And yeah, I do my own podcast, the Peter Schiff Show. I also do the Friday Market Wrap on Schiff Gold's website and my podcast on Schiff Radio and my YouTube channel. So make sure and follow me there, become a subscriber, and listen to what I have to say. I think you ignore it at your peril.
There we go. Exactly. We'll leave all of that down below. Thanks a lot for that, Peter. And I look forward to meeting you IRL in Dubai soon. And hopefully we can do one of these again.
All right. I'll see you there. Bye-bye.